What's going on, everybody? Stocks by the Numbers, welcome back. And I wanted to do a quick update here on one of our favorite stocks, Rolls Royce Holdings, ticker symbol RYCEY, listed here on the OTC here in the States, of course, RR on the LSE. And obviously, I'm sure this is a company that everyone's familiar with, but I just wanted to do a quick update here, just looking at how it's been performing and what potentially may be the next stop. So, looking at the technicals here, one of the things I noticed is you can see that we recently ran up above our previous trend line here of 504, and now we recently actually pulled back below it, potentially trying to bounce off of this 20-day moving average here. I'm looking at the 1 year, by the way. Looks like about 492 maybe, perhaps, but we did have a dip today right here. Of course, rejection here right after the open, and then came up to reclaim the trend line, had multiple bounces off, and now has been running up about 1% off of that trend line. So in my opinion, it still looks pretty stable. However, it did run for quite a while, and we'll look at the RSI on the weekly, which looks pretty high right now in my opinion. So we could potentially continue to sell off a little bit, but in my opinion, I really wouldn't view it as a red flag, just personally, because the company's been doing very well fundamentally on these semi-annual numbers, and supposedly this turnaround is taking place quicker than expected. And of course, the last time we looked at an update, they were talking about potentially reinstating a dividend, and they were also looking to do so maybe a little sooner than people previously anticipated. So in my opinion, this is just a lot of good news. But just looking at recent numbers here real quick, we can see we had a very nice beat on the EPS side by over 21%. The company comes in, beats by over 150 million on the revenue side for those 6 months. And then of course 6 months prior, we can see really nice beat on the EPS side. The turnaround story apparently looks very real, and we can see also the beat on the revenue side by over $1 billion above expectations, coming in over 13%. And of course, this stock originally brought to you on this channel here early January of 2023 at $1.20 a share. So now after hitting this, we can see that we pulled back below our trend line, which was the first time that this has happened since mid-end October. So in my opinion, the volume is actually still coming in, because people, I feel, they're looking at this and saying, yeah, give it more time and it'll probably be 7, 8, potentially, $10 a share. They're going to try to reinstate the dividend, and of course it's just going to be bigger and better things down the road. So I feel like the volume is still consistently coming in, but I just feel like people are trying to pick their spots, and I actually think a pullback here to sub 5, or even if it potentially gap fills all the way back down here to 421, if markets start selling off, again, in the immediate short term, it may seem like a big negative. However, in my opinion, I would be buying those dips and looking to get back to our level here of 504, and then potentially up to the next level, which I'm going to show you now. In my opinion, 690 is my next price target for Rolls Royce. RYCEY again on the OTC. But obviously, I'm sure RR is going to climb as well. But you guys get my point. So, in my opinion, next stop is going to be 690. But even if we look at some of these recent headlines here, it seems like more positive than negative, in my opinion. And let's see. We have Fitch increasing the rating on Rolls-Royce recently. As we see here, this was March 29th, roughly 2 weeks ago. Fitch lifts Rolls-Royce rating on improved financial metrics, expected debt reduction. Morgan Stanley, Rolls-Royce to hit medium-term profit target, return to dividend earlier than scheduled. So, in my opinion, again, everyone seems pretty bullish on it now, and that's exactly what I said, right? I said, in my opinion, they're going to keep it down. They're going to keep it flying underneath the radar. They're not going to talk about it anymore. They want you to forget about it. Then after it runs several hundred percentage points, now all of a sudden it's back in the limelight. Everyone's beefing up the price targets. Oh, wow, this company's doing great. Look, it's going to go up. We're with $7, $9. So now, in my opinion, it's only a matter of time, really, before we hit that next price target of about 690, and we're probably going to see 7, and then potentially after that, looking for maybe like 8.5 or something down the road. But, of course, people could make the argument as well, oh, if they do start reinstating the dividend and paying out to shareholders, then that technically means they're going to have less cash, so the stock may begin to slip a little bit. However, in my opinion, just be looking to drip it DRIP, dividend reinvestment program, and just reinvest those dividends along the way. Even if it does begin to sell off back into the 3s and the 2s, I'll just be grabbing more and more shares, which will yield more and more dividends, which of course, as the company continues the rebound, the share price will probably continue to rebound as well, in my opinion. And of course, that's just going to translate to really good profits. But as we see here, Barclays raises Rolls Royce price target, maintain at overweight. There you go, 430 on the RR. Goldman Sachs keeps Rolls Royce at buy, up to almost 5.25 pounds. Jefferies boosts Rolls Royce price target, keeps buy recommendation. Excuse me, my throat's been bothering me today. Rolls Royce 470, up from 390. So this is what I mean. In my opinion, all of a sudden, there's value here. And you know, we've been sleeping on it, and now it's a buy. Moody's lifts Rolls-Royce ratings by 1 notch on strong credit ratio improvement, right? So if we think about it, if you recall several months ago, our country here, the U.S. government credit rating got downgraded by these same agencies who now both lifted their ratings on Rolls-Royce. So this is what I mean. In my opinion, it just seems like a slew of positivity coming in now, and this is exactly what I was talking about this entire time coming up, trying to update this stock along the way, trying to do updates. It was roughly about maybe like every 4 to 6 weeks or something, I would try to come back and look at Rolls-Royce. But essentially every time I came back, I told myself, you know, I knew it, and it would have been a buy along the way. But like I said, if you're wondering right now, in my opinion, oh, is it the ideal buy right now? Well, I have no idea, right? Because again, we dropped below the trend line, and now we reclaimed it and got back up above 504. So you of course, you could make the argument that we're just going to continue to climb up, but you could make the argument again that we're going to come down, maybe test the moving average, try to sell off a little bit, maybe this gap fill right here, 482, come down here, 476 maybe, before finding that bottom and bouncing, right? So we don't know exactly precisely what's going to happen, but again, that's why I always say, in my opinion, you're better off piecing your way into a situation and then adding on the dips, in my opinion, if you can. But let's switch over to stock charts very quickly. So we can see on the daily here, our bottom Bollinger Band 490, we were looking at that 20-day moving average on the 1-year 492, so we could potentially, again, come down a little bit. Low today, 495, and we're actually right near the highs. So if we potentially close at the highs of the day, then we could, that's not really going to be a bullish hammer in my opinion, but it may make some people happy. But in my opinion, I do think we actually maybe continue to drop down a little bit and potentially touch sub 5 again. But I just love looking at these moving averages here. Look at this, you know, all the way back here, early September, this moving average was down here at, you know, 240. Now it's at 470. And same thing with the 200-day as well. Mid-December was down here, 230. Now it's at 330. So this is why I say, in my opinion, slow and steady wins the race. Because now, even if we do pull back, we're going to have this Bollinger Band to bounce off of potentially. We're going to have the 20-day moving average to bounce off of potentially. And we're going to have the 50-day moving average to bounce off potentially, right? So that's why I like slow and steady climbers. RSI here on the daily, middle of the road here, sitting at about 50. We were up very nicely, though, for several weeks here, coming off of those big numbers. So this is why I'm saying, in my opinion, the volume is, not necessarily the volume, of course, because if you look down here, you could compare it back here and say, oh, it's not as much as that. But in my opinion, I would say the volume is leaning more towards the buy side. Because I'm very confident that, in my opinion, we will eventually see around $7, $8. The company already said they're looking to reinstate the dividend. So this is why I'm to make a bearish argument. In my opinion, I just feel like one of the only legs to stand on would really be that, again, something like the weekly RSI is very high. Look at how much we ran over the last several months, so we have to pull back a little bit and sell off. So that, in my opinion, would be really the main bearish argument that you can make here, because I feel personally, everything that I'm personally seeing, it's looking like a very bullish situation. And we can see that the entire time it was running from the time we looked at it, we retested these mid-Bollinger Bands only 2 times over about the last 15 months, and both times we did not break and we bounced back higher. So that's why, again, a sell-off here to the mid-Bollinger Band, whatever it'll be, 430, 440, if and when it happens, in my opinion, it really wouldn't be a red flag, and I would be buying those dips. But we can also see that now, after this big run, we can see that the 200-day moving average that was basically in free fall mode has now started to flatten out and begun to climb here slowly on the weekly. So in my opinion, of course, that's a very good sign. And even here on the weekly, we can see going back early 23, like February, March, we can see the 50-day down here at 110. Now the 50-day sitting here at 311. So 200% move almost on your 50-day moving average. And in my opinion, that is a pretty good sign. The MACD has curled towards the downside, so this is why we could start to sell off. But again, last time we did, we came close and then bounced. So that's why it might just have to take a breather for a little bit and then turn around and take the next leg higher. But we can see the RSI since about November has been above that 70 benchmark and climbed even above 90. And now on this pullback, we're still sitting here at a little over 79. So that's why I'm saying, in my opinion, we could continue to pull back, but I really wouldn't view it as a red flag. Let's check the pivot points quickly. And we can see we have a support level here at 479, right? So we were saying like 480, maybe 482. So it seems like that may be a key level. So that may be the next stop before we potentially bounce and take that next leg higher. Next resistance level up here at 580. Stock hit 546. Okay. Okay. Check back on the daily. 488 is next support level. 516, you can see, was this pivot point. You can see we were above it, had a couple of bounces off of it, and then recently broke. It looked like it tried to retest, but then rejected and came and continued to come back down a little bit. But again, it had a nice bounce today off of that 504 level after it reclaimed it. But in my opinion, yeah, potentially 490, 480, maybe next stop. It may want to cool off a little bit, or even 470 here and bounce off of this moving average. But in my opinion, overall, I really do still like it. And this is why, again, it may not have been a more popular searched for stock 12, 13, 15 months ago when we started looking at it. And in my opinion, that's the way it works. That's the way it happens a lot of the time. If you take notice, if you go back and look at some of these stocks, they sell them off, they bring them down, there's nothing but negativity, you know, they make it seem like, in my opinion, almost like there's no reason to own it, it's just inevitably going to go lower. Something like this was up here double digits, holding these you know, low teens, and now all of a sudden it's down here at sub $1, trading at 70 cents, and now boom, just a rocket ship for the last 15 months. So, well, technically longer than that, but you understand what I'm saying. And that's why, in my opinion, it of course depends on the situation, because it's hard to read, but my original thoughts when we first looked at Rolls Royce was, is a brand name company, right? They've been around a very, very long time. This is why, this is like a staple. You understand? It's like a staple brand name in the space. And it appeared to me as though even if times are rough and they just got completely smacked around, and, you know, the numbers in the more recent reports were a little rocky and were a little negative, in my opinion, it was inevitably going to rebound, because you're not going to have a company like this just go out of business. You're not just going to let them go. So, you know, in my opinion, it almost seems similar to Ford, if you recall, when the government kind of helped out Ford here in the States. I believe that was what, like 08, 09 or something like that. And I remember, like I told you guys, I used to be a broker, and I remember when I would speak to people on the phone, apparently everyone had the same phenomenal broker, because everyone I spoke to always told me, oh yeah, I bought Ford back down at $1, you know, and now it's $10, $12 and it's great, and oh, it was a great call. So Of course, not exactly the same situation, but again, in my opinion, it was an older company, brand name staple in the space, in my opinion, so nothing was going to happen to it, I felt. And that's why I said that over time, after they beat it up now, this is the time, in my opinion, to start accumulating shares and building a position. And then I said, you watch, all of a sudden the contracts are going to come in, and then all of a sudden they're going to be coming in above these expectations. And then all these analysts are going to come out and they're going to increase their price targets again. They're going to increase to buy ratings. And that's literally exactly what you're seeing happen in real time over the last 15 months. So, really good call here on this channel. Rolls Royce Holdings, again, RYCEY here in the States on the OTC. But in my opinion, really, regardless of where it is, I would probably be a buyer. Even, again, if it comes all the way back down here to like 420 to fill this gap, I would be buying, in my opinion, on every dip. And I do feel that 690 will be the next stop. That is our next mark. And if they start paying out that dividend, it's just going to be the cherry on top of the sundae, in my opinion. You know? And I'm going to end it there. That's enough. So once again, this is Stocks by the Numbers. I want to thank you guys for stopping by. If you have any questions, comments, or concerns, drop it down in the comments section. I'm usually very quick to reply. Thumbs up algorithm helps me get more eyes on the channel. And of course, subscribe to the channel. That is our handshake agreement. That is how you help me help you. But more importantly, moving forward, like I always say, I understand that markets are rocky, they're volatile, they're very uncertain. So I want to wish all of you success. I hope everyone makes a couple of dollars. Thanks for stopping by. Have a good day, guys.